Good afternoon, everyone. Welcome to our Selecting an Option Strategy webcast. I'm Connie Hill. Happy that you have joined me here today. You know, I've had some interesting things going on in the market, and I have a question for you. How do you know when we've changed trend? What are the things we can look at on the chart to let us know, has the trend really changed on us? Want to get your thoughts on that? Feel free to tell me what you try to look for. We're going to expound upon that as we get further into our discussion here today. Now, I am joined in the chat by Cameron May. Happy that Cameron's there, fellow coach. He's going to help maybe catch some questions that I don't get to or can't respond to quickly. And so as you have those questions, go ahead and chat them in. Those of you that are listening to this on the recording, I know there are lots of you, when you have a question, go put it in the YouTube comment section, because I go back and look at those throughout the day. Make sure you get your questions answered quickly as well. Now, I hope you're following us coaches on X. I'm Connie Hill, CS. Cameron is Cameron May, CS. And as we notice things throughout the market day, things that we think you might find interesting, we try to point those things out to you. All right, so follow along. It's free and easy to do. I do want to give a quick shout out to some of you that have been chatting in here, and happy to see you come back week after week. We've got Marcus and Ricebird, and there was a few people before that. Let me get up to the right spot. Oh, now I'm not seeing it anyway. Patrick, that's who I couldn't see. It was Patrick in there. Kurt, Mighty Mouse Scott. Happy that you are all joining me here right now. Let's go through some disclosures, and then we will get down to business and talking about how can we tell if there's a change of trend. Options carry a high level of risk and are not suitable for all investors. What we talk about today should be considered educational and informational. Don't consider it to be a recommendation. We will be using the Paper Money software application. That's what you download to your computer. It's the most robust version of the Thinkorswim platform. Past performance of any security or strategy does not guarantee future results or success. Sometimes we do short options in this class. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. That's one thing that's different in your Paper Money account than in a live market. A live market, you certainly could be assigned early. It doesn't mimic that functionality in paper, so we like to let you be aware of that. Okay, some upcoming workshops. I know many of you are starting to take advantage of these workshops. We're doing a whole lot more of them, workshop and market drive events, than we did last year. Last year, we really ramped up quite a bit. So all three of these that you're seeing here are workshops. So the first day typically is technical analysis. Second day is option strategies. You don't have to go to both days if you're only interested in one day or can only attend one of the days. But I'm going to encourage you to sign up quickly because they're filling up really fast. So if you think you want to get there, please do. All right, we always want to take a look at market conditions, and to our conversation, I want to weave this idea of how do we know when the trend has changed? We're going to be using an indicator today some of you might be familiar with. It's called a market forecast indicator, and we'll go into details about that. Then we want to talk about what strategies might work in our current market. Of course, we're going to look at a lot of different examples. Now, I'm going to come back here to the chat because I wanted to see if some of you responded to my question, what do you look for on the chart to let yourself know that the trend has changed for us? Okay. I also have chatted out into the chat, I should say, the playlist for our class, Selecting an Option Strategy. Okay, Scott says, I look for a change in direction of MA lines, moving average lines. Excellent. We'll talk about that. Ricebird, appreciate the comments there. All right. So, Scott, apparently you get the gold star. You participated in the question answer. And hopefully by the end of our discussion, you'll feel a little bit more comfortable with this idea. How do you really know the trend has changed? Let's hop on out to my Thinkorswim. And we're going to start out here on charts. Now, I have up here just the SPX. Blue line is a 10-day exponential moving average, so pretty quick. A 30-day is this red line here. So that's kind of intermediate trend, kind of on the shorter end of an intermediate trend as far as looking for those moving averages. So Scott said, well, one thing you can look for is that the direction of those lines are changing. Now, we've known that the SPX has been below the 200-day moving average. In fact, let me switch for a moment here to that study, and this green line is that 200-day moving average. Yeah, the market had been below that for a little bit of time in that big sell-off that we were seeing. And so we've kind of been watching for, gee, are things changing now? So notice on yesterday, it closed up above that 200-day moving average. And sometimes that's what some people might look for the beginning of a changeover. Now I'm going to go back to the 1030 and the market forecast study here. And I'm going to kind of zoom in here a little bit. What some people might look for is, okay, are we seeing a change of higher highs and higher lows? Okay, and it's just not, a candle here and a candle there, but kind of a prominent peak, prominent trough. And so if we were looking at what's going on right here with the SPX, I would say yesterday we had a high higher than the previous high, which would have been right here. So we've got one higher high. Well, does one higher high mean the trend has changed? Not necessarily, right? Maybe a higher high and a higher low might be the beginning of a change of a trend. Or we could use those moving averages. Now, we can see our 10-period moving average just in the last couple of days has finally started to turn up. So it's very, very new to be slightly bullish, having one higher high. This market forecast, let me come over here and share this with you. From my studies, to pull this market forecast study up, let's go Market F. You are going to have a generic market forecast. And then the one that I'm going to show and share with you is this one called Market Forecast. And then I have KR at the end. That lets me know that it's been modified. Let's go ahead and put the regular one in here so I can show you what the difference is, what we want to look for. If you are interested in having the modified version, I am going to send that out to the chat right now. Those of you that are here live, actually that copied more than what I wanted it to. So let's try this again. I just want this little guy here. This URL will give you the enhanced market forecast. Okay, you can go ahead, copy that over into your setup and open shared items. Okay, remember what you call it. I call it market forecast enhanced. Well, market forecast KR. Okay, so here are the two. Here's the basic one down here. And you can see they both have red, blue, and green lines. And the lines are at the same spot for both of them. Okay, I've made these lines a little bit bolder. I've set them to a 3. Okay, and then let's talk about what they represent, what each line represents. The red line is really quick moving. Okay, we have boundaries here of, let's go right here. That red boundary is at, this one looks like it's at 80, and the bottom one is at 20. In this red area, it's called the upper reversal zone. And when we see our lines getting in there, for example, this blue line is up here in this upper reversal zone. That lets us know that it's heading up and it's above that 80. And so it's basically saying it's really strong trending right now, that time frame. Well, what is the time frame here for that near-term line? It's kind of like a swing trading timeline. You just had swing trading class, which could be, 3 to 5, maybe 8 days, kind of in that general time frame. It's trying to tell us what market activity or market action is doing right now for that time frame. The red line is super quick. That's our momentum line. It can go from upper reversal zone to lower reversal zone in a day or two. Look how fast it moved today. It was in the upper zone, and now here we are towards the end of the day. It's almost to the lower reversal zone. The green line, that's our intermediate line. Sometimes people have a tendency to pay more attention to that because it's kind of what's the intermediate trend of whatever we're looking at, in this case, SPX. Now, if it's headed up, then we'd say SPX is bullish. If it is headed up, but it's down below 20, then we don't. It has to be above the 20 to be considered bullish, okay? And same thing when it comes from this upper reversal zone, it has to cross down below the 80 before it's considered bearish. So if somebody wanted to kind of simplify this, they could say, I don't want to see the red line. Maybe I'll just pay attention to the blue line and the green line. But right now, as of today, the green line is out of that upper reversal zone. And so that can be the beginning. Doesn't mean that it has to be the beginning. It can be the beginning of a trend change. Okay, we'd want to wait for confirmation that that really is the case. And right now we on the SPX only have one higher high. You can use, the questions are going to come up here, can we use this on something other than an index? And the answer is yes, you can. In fact, as we look at some different stocks, we'll put it into consideration. Now let's look at here, the NDX, all right? And actually, I'm going to get rid of this original market forecast, because now you know what the lines mean, and you know, hey, this gives you some enhanced visibility on the study. One thing I didn't point out to you is right here in the top, it'll give you the actual reading of each of these lines, red, green, and blue. It'll tell you if it's going up or down. So this is showing red falling, blue rising, green rising. So if you're not quite sure, this is going to tell you that as well. So it gives you quite a few, I'm going to say, things that are a little bit nicer for you to be able to see with that market forecast study. So let's get rid of the generic one, and we're just going to use the enhanced one. Now, I'm looking at the chat here. Looks like some of you did chat in about maybe what you might look for a trend change. Marcus said breakouts. Greg says a close above the high of the low day, question mark. One thing I would caution you to remember on a close above the high of the low day is that that is something we see in a bullish trend. So if the trend isn't bullish, say it's just headed down, 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 and you get one candle up that's a close above the high of the low day, it's not nearly as compelling in a downtrend as it is in an uptrend. So Greg, I'm actually glad you threw that out there. Riceford likes to see a hold and some follow through after a couple of days. So seeing if the market really continues to respond or if it was just a one-day wonder. Great, breakout above resistance. All right. Yes, one thing on the scripts. Thank you, Cameron, for saying that. Anytime we share a script with you, it's not guaranteed as to accuracy or timing. All right. So on the NASDAQ, it's above its 10, and its 10 is hooked going up for at least a couple of days here. It has a higher high, just like the SPX. And today's even a little bit higher, but yesterday it made a high higher than the previous high. And there could be one thing that we maybe see a little bit here that we didn't see so much on the SPX, is that possibly some of you might look at this green candle here kind of as a little bit of a pullback, how far it went back, as a slightly lower low. Okay, here was the previous low right there. Kind of goes up and dilly-dallies a little bit before it pops. So some might say, okay, it had a higher low to go along with the higher high. So maybe it's a day ahead, say, of the SPX. Okay, a volatility. VIX, we try to keep track of what's going on with the VIX, right? And so what's it been doing the last few days here? Yeah, the put-call ratio, which is what this is essentially mapping, is letting us know that puts are not outpacing calls. When puts outpace calls, that's when we start seeing the VIX rise. We see skittishness in the market. We see people maybe being a little bit more defensive. And so most recently here, it's kind of starting to get back. It's not all the way down here to say 14. It's not down here at 12, but it's not that far away from it now. okay, as compared to when it was up here, 28, 29. So volatility starting to pull back. So that might give us a little bit of maybe consolation that the markets are settling down. And then we might want to wait for confirmation that the price action really follows through. Okay. So given this, I want you to chat in. Are you more bullish, bearish, or neutral as far as the intermediate trend of the market? Are you more bullish, bearish, or neutral? Go ahead, chat that in. I will check your responses as we come back here to our slides and look at some of the strategies that we consider. Okay. Now, I'm going to tell you, I have something for everybody today. Whether you're bullish, bearish, or neutral, I do have something for you. But when we think about these strategies, sometimes people might go, well, maybe we are a little bit more neutral now. Maybe we consider a neutralish strategy that maybe has a slight tilt to the bearish side or a slight tilt to the bullish side, which is what some of these can be. Something that maybe seems range bound, maybe is where the iron condor fits in. If you're feeling a little bit more bearish, maybe these are the strategies that you've put a little bit more focus on. I would say that regardless of how bullish or bearish somebody might be, because we're just kind of maybe in transition, that maybe we might want to use some strategies of spreads without being incredibly directional. Okay. So those of you that felt brave enough to share an entry, thank you for that. Marcus says bullish. Scott says neutral. Kurt says neutral. Greg says I'm confused. You're more confused. Hopefully by the end, Greg, you'll at least have a little bit more clarity. Okay. Sometimes we will see conflicting things on the charts. Sometimes we will, and it's kind of like you see different price patterns. Oh, I see, some higher highs and higher lows, indicating an uptrend, but then maybe we see some resistance on the top. Oh, maybe that's a triangle type formation. So sometimes we do see conflicting things on the chart. All right, so I'm going to say we have a mixed bag. Okay, we have a mixed bag here between bullish, bearish, well, bullish and neutral, really. Maybe not even so much on the bearish side. One thing I'm going to suggest, we'll go back to our charts for this. One thing I'm going to suggest is, regardless of what direction you're thinking of trading, bullish or bearish, keep in mind that you want to identify what the trend is right now. Okay? For example, I'm going to pull up a stock here that maybe hasn't pulled back all that much. Let's start with Netflix here. And as we kind of zoom in here on Netflix, we can see, it really has recovered quite a ways from where it pulled back, had a higher high, higher low, higher high, higher low, and the last couple of days putting in another higher high. So it has had more iterations of what we want to look for trend changing. It's above the 10, it's above the 30, as well as being able to see at least 2 higher highs and 2 higher lows. So even if you think the overall market is a little bit more neutral, maybe you're confused, look to your individual stock and I would say probably try to trade in the direction of its trend as opposed to the opposite. Okay? Really stick with the trend. Now, here in this case, we've got Netflix. We're going to do a trade on Netflix. You might guess could be a little bit more bullish on it. Okay? The one thing I like about this right here is the fact that it kind of followed along the 10-day, and now it's making some movement even beyond the 10-day moving average. Okay? Some people might like this idea that it went above an intermediate moving average as well. Now, it's not completely a hold, okay? I'm going to say, but it is kind of a bounce off of, I'm going to say the moving averages here, okay? So let's see what we might put together here. Now, if we were looking at our strategies and would look at our bullish strategies, some people might be really bullish on Netflix and may say, oh, I will play a long call on it. For our trade today, we're not. We're going to be doing some verticals, but on this one, we're going to do a long call vertical. Now, there are some weeklies, but the ones we're going to use today, at least on this one, is the April 17s, their monthly expiration. We've got oodles of open interest, more say on the call side than the put side, okay? But there's a lot of liquidity, which we love to see. What we're going to do here, we're going to do the 995. We'll see if this still makes sense to do the 995, 1,000, where we're going to buy a long call vertical. All right, so it grabs the next one in sequence, which is the one we wanted, 1,000. And it actually is, it's okay where it is. You know, sometimes we might want to risk a dollar to make a dollar in long verticals. Sometimes we are satisfied with less than that, okay? So in this case, we're going to be risking, let's open up our calculator, $5 spread minus 318. 318 is what we're willing to risk to gain 182. Okay, so 318 divided by 182. Actually, we're going to reverse that. Okay, that's what we have to gain. Let's say divide that by 318, if it'll do it for me, is about a 57% return. That might be lower than what some people like to target, all right, but certainly not shabby. Where is 1,000? What would this stock need to do to get above 1,000? Well, I'm going to go put a line there, okay? Does it have to go very far? No, it doesn't have to go very far at all. Let's see, that's pretty close, 1,079 cents. Does it have to move a whole lot? No. If somebody wanted to be more aggressive and maybe bring in a bigger return, what they might consider is going, well, fine, I'll buy the 1,000 and sell the 1,005. You certainly could do that. That might be more aggressive. We're going to stick on the more conservative side with this one, okay? We can, in this class, we're willing to risk $1,500, okay? So if we have $1,500, divide that by 318, we can do 4 contracts. So that's what we're going to do, okay? You could do, Chuck says, you know, what about a short put vertical? You certainly could go on that avenue. Absolutely, you could. It would be appropriate as well, okay? For our purposes, we're going to do kind of a conservative long call vertical. And I say conservative because we're not looking to make a big move, all right? We're looking for actually kind of a puny move as far as Netflix goes. So let's do our 4 contracts. And let's do a first trigger sequential. And it can be really helpful to put in an exit order the time you put in your trade, right? That's one of the things I've tried to stress with you in this class is if you have an exit point that you want to use, plug it in there and then let the Thinkorswim platform capture it for you. You don't have to be sitting there staring at your computer waiting for it to get to an exit that you're satisfied at, okay? Now, if 182 is our max theoretical gain on this. What if we can get, say, 80% of it? Okay, let's get out if we can get 80% of it. So we'll take our $1.82 times 0.8. That's going to give us 145. Okay, so we're going to take 145 plus 318. We're going to say, no, that didn't go quite as stable. Let's clear that out. Our 182 times 0.8, I better write that down as $1.45. We're going to add that. I'm going to clear that out and retype it in here. 1.45 plus 3.18. There we go, 463. Let's go buy it back at 463. Be happy with the chunk of the gain that we are putting in for and move on. Okay? Sometimes when you get a majority of it, you're risking a lot more to get a few more pennies out. We're not going to take that approach in here today. So our first trigger sequential will create an opposite order, and we're going to buy this one back at 463. It'll be a limit order we submit. We'll do this good till cancel. This is not the only target somebody could consider using, okay? But it's the target that we're going to use for this particular trade. Let's go ahead. Let's hit confirm and send. and we're going to put it in our option strategies bucket. All right. Market's closed right now, so I'll just make sure that gets filled in the morning. All right. Now, Ricebird, I want to read your comment out here to the class, Ricebird. Today's action has not given me confidence the market is moving back to bullish. I'm okay with that comment, Ricebird. Yeah, you're looking for a little bit more confirmation beyond maybe a few days of movement, right? Yeah, it's above the 200-day moving average, but you're looking to see a little bit more. That's just fine. More confirmation. Well, let's look at something. I told you I'd have something for everybody, the bulls and the bears. We're going to go to a bearish one now. And let's take a look at this one. This one, I actually toyed around with it a little bit. We've got Walmart. Had been doing really well for a long period of time, like lots of other stocks. But as we look at it, hasn't it recovered enough to be bullish? Below our 10, it's below our 30. And as we look at these lines down below, the red's headed down, although it can pop up tomorrow. The blue is headed down, and that green, which would probably put more emphasis on, that intermediate line is down in the lower reversal zone, and it's still there. Okay, that means not bullish yet on Walmart. Okay, so we're going to take that into consideration. And let's come up here. It has some weeklies as well, but a lot of traders like to sell and work with 20 to 40 days worth of time. And right now, the April contracts are just kind of in that sweet spot. Okay, I like the liquidity that we're seeing there, so we're going to stick with this for Walmart. Now, if somebody wanted to be stronger bearish, they could buy a put, or they could buy a long put vertical, or you could do a short call vertical. Okay, there's not necessarily a right answer of only way to trade something, right? So what we're going to do here on Walmart is we're going to do a long put vertical. Okay. Typically, we're going to start at our at the money. So we're at 84.76. And we've got some single strike increments here. Let's see if the one I had eyed initially, I was eyeing in 85.84. Let's see how this looks right now. If we say buy vertical on the put side, we've got a dollar wide spread. 84. I'm good with the open interest here. Can you see how much volume activity came in here today? Over 1,600 contracts to be added to the already existing open interest of 29. That's looking very favorable to me. Earlier today, I was like, well, maybe we could spread it out a little bit. But say like this 83 doesn't have nearly as much open interest. Would probably have to go to 82.50. So let's work with the $1 wide spread. For those of you that are in smaller accounts, sometimes it's nice to be able to have single dollar increments to kind of finesse what you're trying to do. Okay. Without taking on additional risk, right? Because if we were going to risk $43, and let's say you could risk $200 in your account, then you can have a small number of contracts and not have it be a big deal, versus say a $10 wide spread or something like that, where you have to be risking more per trade. So we're going to stick with this 43. And let's see, we've got 43. If we get the inverse of that, let's see what that return would be, because we're going to be risking 43 to make 57 cents, right? 1 minus the 43 is going to be 57. So our max theoretical gain here is 0.57. 0.43 is the max theoretical loss. What kind of a return does that give us? Wow, that gives us 132%. That sounds a little outrageous, but really, the Walmart probably doesn't even have to move a whole lot. Where do we need it to move to? We need it to move to the 84, right? Right now it's at 84.76. So drop a little bit more. That's not asking a ton of it, is it? Here's 84. It's where my mouse is, right there. In fact, I'm going to try to lock it in there. That's $84.10. Okay. but it gives us an idea. Okay, we need it to drop a little bit, right? Take 76 cents, drop that down, and we want it to go beyond that ideally. That's where we start locking in profits a little bit more aggressively. So on our trade, if we can risk those 57 or 43 cents rather per contract, and we can risk 1,500 in our account, let's divide that out. How many contracts can we do? Whoa, this is saying 34 contracts. That's a lot of contracts. We're going to do it though. Okay. Now, in your position sizing of your account, it might be different. Okay. When we queue this up, we'll make sure that we're not going beyond that. But I think that actually mathematically is correct there. Let's do our first trigger sequential, and let's go ahead and put in our exit order. Now, the exit order here, we're going to be a little bit more conservative. Let's create our opposite order. Yeah, if we're trying to get 57 cents, okay, 0.57, and what if we were to go for 70%? First one we did 80%, less on this one, let's go for 70% of the max gain, okay? Times 0.7 is going to be 0.399, let's round it up to 40, okay? So we want to buy this back when it gets to 83. We're adding the 40 to the 43. That's where we get our 83. That's where we want to buy it back. We'll make it good till canceled. Let the system know we'll be happy to exit if we get that chunk. Now, it could be that maybe it moves for about a week and it hasn't hit our max gain. That's a possibility. We could, if we want to, depending on how it traded, possibly go in and adjust our target. Okay, but for right now, for starting out, that's where we want to go. All right, so let's, we've got our 34 contracts. Let's make sure here, our max loss, 1462. Okay, so we position sides properly. It's not over 1,500. Just wanted to kind of point that out to you. Again, tomorrow, I'll make sure that we get filled on this particular one. Now, I'm going to go back to Walmart for just a moment here. One thing I had toyed with earlier before our class started is I had toyed with the idea of doing an iron condor here. Okay. And, you know, it's been quite sideways here. Walmart certainly has a lot of open interest. These are, you know, very fluid or liquid contracts. And so the thing that I had toyed with was, you know, maybe we could get away with doing an iron condor, short call vertical, short put vertical. But as I kind of studied it a little bit more carefully, I thought, you know, this is just bouncing down off the 10. You know, probably just feeling a little bit more comfortable doing something bearish versus something more neutral. Okay. But it was a thought that I had. And the reason I decided not to was because of its relationship with the 10-period moving average, just really staying below it and bouncing down across it again and looking to take advantage of maybe just a small little move here. Let's see. Let me see what we've got here. Chuck says, don't you think it'll bounce off support? It could. It could bounce at support. But again, I was looking more at the what's it been doing? It kind of goes sideways, hits the 10-day moving average and drops. Goes sideways, gets it along to the 10-day moving average and drops. But you're right. Okay. If somebody wanted to be more certain, you could come in here and you could say, well, maybe even about that same line, that 84-ish line, you could make a contingent order and say, I want to make sure that it goes below 84 before getting in. Somebody certainly could do that if you had a concern at this bouncing at support. So good thought there, Chuck. Moxie, you're good with the math? Okay. All right. So we've done one bullish, one bearish. We talked about doing a neutral with Walmart, but we're not going to do a neutral there. Okay. Let's do something else that seems more bearish. Okay. And again, it's difficult to know if it really is changing. We've got our antenna up, that we've got we've got our antenna up, we've got one higher high. And that's the very beginning of a trend change, but who knows if it'll pull through for us, okay? So the last bearish trade that we're going to do here is UPS, okay? Now looking at UPS, looks like maybe there was some resistance around this 118. And it looks like maybe it ran up, it rallied, had a hammer, looked like it was going to reverse, and it just didn't get very far. Man, we've got a pretty good sized bearish engulfing candle here. And so we're going to take advantage of looking at something bearish. Now, I'm going to draw a line here as well. You know, the idea that Chuck brought up that, you know, wouldn't we maybe want to see it break below support? That very well could be the case. Today it moved, what, 5%? So this one, we're going to put a contingency on it. We're going to say, okay, stock, if you trade down to, we're going to go to 108. I'm just going to write that number in here. If it goes below 108, then get us into this trade. If it doesn't go below 108, we're not going to enter. Okay. So let's go ahead and put this on. And we were looking here to do the strikes I was kind of eyeing here. Let's see if they still make sense. I was looking to do, I don't know that this, I think it maybe have moved on us quite a bit here. Let's see where there's open interest. We could do a long put vertical here. We could do a buy, and then we could just play with the strike prices. And instead of saying 109, let's go up here to 105 where there's quite a bit of open interest. We're starting here at a 49 delta, which is helpful, but no, the values are going to change once it gets below 84, or rather 108. So let's go 105 here. And so we've got about a $5 wide spread, a 159 net debit right now. But when we say, hey, don't get in until this happens, it's going to be different, right? It's going to be a different value. It might be closer to risking $2.50 to make $2.50. Whereas right now it looks like we're poised to gain a lot more in terms of that ratio, right? Because if we said, okay, 160 is our theoretical max loss at that point, then we'd have 340 to gain. We're really not going to gain 340. It's going to be significantly lower than that, okay? But let's go ahead as far as our position sizing goes. Let's assume we would be risking 250 to make 250. We don't know for sure if that's exactly where it's going to go before it might fill. But we're going to make that assumption, so we're going to do 6 contracts, okay? Let's go ahead and put on our 6 contracts. We're going to do our first trigger sequential, and then we're going to put conditions on it. How do we put on those conditions? We come over here to the gear, and really what we're going to do, it says limit right now, we're changing it to market. We're going to make it be conditional upon the UPS getting less than or equal to 108, which means it's got to move like a couple bucks, okay, before it does it. Let's make sure this is the right way. Security is less than or equal to 108. We just want to make sure we've got that in place correctly. And then after it fills, if it fills, then I'll go ahead and put on the exit order. So really, we'll just change this to a single order here, okay? We're going to go ahead. We're going to put this in our option strategies bucket. I forgot to grab it, but I'll go change it. Once it fills, I'll put it in our option strategies bucket. Okay. Yeah, rough day for UPS. It certainly was. But I do like this bounce down off of those moving averages, right? It's got barely above the 30, and then it just dropped below both the 10 and the 30 here last couple of days. All right. Do want to do a quick follow-up with some of our trades that we're following up on from previously, okay? Number one, let's look PayPal. In an order for PayPal to do something, and it hasn't done it. And so our buy stop order is still sitting there. What we looked at last week is we were looking for it to maybe break out of this sideways flag pattern. There was our flagpole. We've got this flag pattern. It's starting to get really long, okay? And actually it has moved up. Our idea was to get in if it broke to the downside. Now it hasn't really done that, and because it hasn't, let's go ahead and just cancel it. This is looking a little bit less like a flag, because we would have wanted it to have broken out yet. It's looking more like it's forming a base, which might mean that it's kind of setting up to reverse, okay? Interestingly enough, our green line is coming out of that lower reversal zone on the market forecast, and green above 20 means potential bullishness, okay? So that's another reason for us to get rid of this in our working order. So let's go find our PayPal, and we're just going to cancel that order. We don't care about it anymore. Next up, we have a couple trades that we're working with that really we're going to let them keep working. Okay, we have ALB and Disney. Disney has 10 days left. We did a shorter time frame on it last week. Okay, we collected 154. Right now the spread is worth 144, so it's going the right direction. Okay, we ideally in our world want it to be below 102, and it hasn't moved a great distance since we got into the trade. Let me show you. Got in here last week, and it's kind of dilly-dallying along. Here's our 102 that we wanted to stay below, and it got up close to it a little bit today, so we're going to be watching this closely. This green line, well, it just barely came out of the lower reversal zone. 20.17 is what we're seeing here on the reading. So we're going to watch for that line to possibly come out of that lower reversal zone, maybe start showing a little bit more bullish activity. This intermediate line here, the blue line, is indicating some bullishness for that 3 to 5 day, maybe 8 day time frame, swing time frame. So we're going to be watching that closely. We may have to exit the trade. At this point, I'm not convinced we're wrong. Okay, it's still below the 102. The other one we're still watching here is ALB. And we have a short vertical on it as well. We're looking for it to stay below 80. We got in it a couple of weeks ago. We have a little bit more time with it. We have about 23 days because it's not till April 17th that it expires. Right? So it's gone absolutely the opposite direction we want to see it go. However, it's having a hard time getting above that 80. It's acting as resistance. And so as long as it's down, up in that territory, we're not going to worry about it so much. Now, I do hope all of you are subscribers to our Trader Talks channel, right? You click on that little icon, your YouTube icon that's kind of bluish down in the bottom right corner, so you can be a subscriber to our Trader Talks channel. Makes it so much easier for you to find our content. If you were looking for the playlist for this class, we'd go down about 7 rows. And then you could see here, selecting an option strategy. You can go back to those previous classes that we've held if there's something that you want to follow up on. Okay, so just being able to find the content makes it so much easier if you become a subscriber. So I'm going to encourage you to do that. Now, I do not think that we had a survey out here today. I didn't see one. Okay, but if you found this was helpful and useful to you today, go ahead and give us a thumbs up on the like as you exit out. And just as a reminder, Cameron and I would love to have you follow us on X. Connie Hill CS, Cameron May CS. All right, this is the last class of the day, so we'll be meeting you again tomorrow morning, right at the opening bell with our Trader Talks. We'll see you there. Have a good evening, you guys. Bye-bye.